$725 billion just hit the AI cap table. Wall Street already picked the winner. This is AI News Now from ANN Live for Thursday, April 30th, 2026. The number, Google's breakout, Meta's punishment, Microsoft, and Amazon. The OpenAI security story, almost nobody covered, and the bets to make on the back of all of it. Last night, the four biggest American technology companies told the market what they intend to spend on AI in 2026. The combined number is $725 billion. $725 billion. To put it in scale, that is more than the entire annual military spending of every NATO member except the United States in 1 year, from four companies. Last year, the same four companies committed $410 billion. The new number is up 77%. Read that. In a single calendar year, the AI infrastructure bill went up by more than $300 billion. The breakdown by company: Microsoft, $190 billion. Alphabet, $180 to $190. Amazon, $200. Meta, $125 to $145. Every one of those raised guidance on this call. Amazon is actually the biggest absolute spender, $200 billion. They held that number flat from prior guidance, and the market called that discipline. The other three raised. And here's the line nobody is highlighting. Of Microsoft's $190 billion, $25 billion is described, quote, as higher component prices. That is what supply constraint sounds like in a public filing. The takeaway from Act 1. Compute is no longer an input cost. It is the currency hyperscalers fight in. Whoever locks the most chips, the most power, and the longest power purchase agreements wins. Now to the only company that walked out of last night a winner. Alphabet wrapped up its best month since 2004. Stock up 34% in April, up 6% after hours on the print, the single number that flipped the night. Google Cloud revenue up 63% year over year to $20 billion in 1 quarter. Analysts expected $15.3 billion. Cloud beat by almost $5 billion. Total Alphabet revenue, $109.9 billion, up 22% year over year. The highest growth rate the company has posted since 2022. And operating income from cloud, the actual profitability number, tripled, 3x year over year. That is the data point that turned the AI Capex story from theoretical to bankable. And then there is the backlog. The amount of contracted future cloud revenue Google says it has under signed deals, $460 billion. That number nearly doubled from the prior quarter. Search did not slow down either, up 19%. Pichai said queries hit an all-time high. The thesis that I would kill Google search is now publicly losing. Quick connection. 6 days ago, we covered Google's $40 billion Anthropic deal. Last night was the first hint that the bet pays. Anthropic compute drives cloud revenue justifies the Capex. The flywheel is real. Result: Alphabet, stock up 34% in April. The last time Google had a month this good, the founders were in their mid-30s, and YouTube did not exist. Now to the company that did the opposite. Meta beat revenue, beat earnings per share, beat net income, grew revenue 33%, the fastest top-line growth since 2021, and the stock dropped 8%. The reason? Meta raised its 2026 Capex range to $125 to $145 billion. That top end is up $20 billion from the prior guide. Investors heard the number and ran. Meta stock fell roughly 7% after hours, then about 8% in early Thursday trading to $614. The rally that defined Meta's 2024 and 2025 just got a hard pause. And the bigger pattern. Reality Labs lost $4.03 billion this quarter alone on $402 million in revenue, 21 consecutive quarters of losses, averaging $4 billion each. Cumulative Reality Labs losses to date, $83.5 billion. To put it in perspective, that is more than the total annual profit of every American airline combined, burned. Without a shipping product, JPMorgan downgraded Meta to neutral from overweight on the print. The note specifically cited, quote, a challenging path to generating returns on its heavy Capex forecast that is analysts speak for. We cannot see the revenue side of this trade. Two more numbers from the print. 8,000 jobs cut this quarter, and daily active users declined for the first time in Meta's history. Both fact buried under the Capex headline, both relevant to the next earnings call. The phrase the market settled on overnight was asymmetric risk. Meta is spending $145 billion on superintelligence research. The downside, if it does not work, is most of the company. The upside, if it does, is everyone's company. Story 4. The other three: Microsoft, Amazon, Apple. Different stories, but together they fill in the picture of where the $725 billion is actually going. Microsoft, $190 billion in Capex, $25 billion of it just price inflation. The bigger issue: Azure is supply constrained. Customers want more capacity than Microsoft can ship. That means Q2 revenue is being left on the table right now. Amazon, $200 billion, held flat. AWS revenue steady. No supply crunch comments. The market read that as discipline, and Amazon stock actually closed up on the day. And Apple, different game entirely. Apple's not in the 725 number because Apple is not building data centers. Apple's print confirmed an on-device AI strategy built on the M5 generation of silicon. Local inference, no cloud Capex story. What the four prints together tell you. Three strategies are now clearly competing: cloud-first scale, hybrid discipline, on-device inference. The next 2 quarters tell us which one the market actually rewards. Story 5. The OpenAI story almost nobody covered yesterday because everyone was watching earnings. On April 29th, OpenAI revoked the signing certificate for its macOS desktop apps. The reason? A third-party JavaScript library called Axios, version 1.14.1, was compromised by North Korean state actors on March 31st. A GitHub Actions workflow inside OpenAI downloaded and executed the malicious version. Apps affected: ChatGPT Desktop, Codex CLI, Atlas. The workflow had access to the certificate and notarization material used for signing all of them. The compromise was not data, but trust. If you use any OpenAI desktop app on Mac, the deadline is May 8th. After that, the older versions stop receiving updates and, quote, may not be functional. So if you are listening to this, go update now, genuinely now. And the deeper point: the same week, the 4 hyperscalers committed $725 billion to AI. A single compromise dependency reached the signing keys of one of the most watched AI companies. AI is not just a software supply chain. It is a state actor supply chain. Pull back for a second. The thing that changed last night is not the size of the spending. We knew the spending was going up. What changed is that the market is now sorting hyperscalers into 2 buckets. Customers, or hopium. Bucket 1, companies that turned compute into revenue. Bucket 2, companies still paying for the privilege. Google is in the first bucket. Meta is in the second. The other 2 are still being decided. 6-month forecast. Capex revisions every quarter, almost always upward. A real GPU shortage that limits training runs at 1 or 2 of the 4 companies. And at least one analyst declares an AI Capex bubble before October. 12-month forecast. The first hyperscaler quietly cuts a Capex number it announced this quarter. The Anthropic and Google flywheel goes from theory to a published case study. And Meta either ships an AI product that monetizes or replaces a senior leader. And the bet: if you are betting on this race, the unsexy answer keeps being right. Own the silicon, own the power, custom chip designers, networking, long duration storage, transmission. Those names compound regardless of which hyperscaler wins the quarter. If you are shipping with AI, 2 takeaways. 1, multi-cloud is the only sane production stack right now. Microsoft is supply constrained. Google is winning capacity. Build for both. 2, update your OpenAI desktop apps before May 8th. That is the April 30th briefing. The headline is $725 billion. The story is that the market just learned to tell the difference between AI that earns and AI that spends. For ANN Live, I am AI News Now. We will keep